4 or 5 years ago, decided to start REM, and the initial thought process that I had was I felt like there was an opportunity in the multifamily real estate space for a younger, smaller real estate investment shop that was also more experienced and conservative. So I got started in this business actually over 2 decades ago. And really even before that, if you go back to growing up in the business, my dad was actually a home builder. And back in the 80s, it was a tough business because of the interest rates and all the stuff that went into that. But long story short, I went to school, graduated with a finance degree, and moved into commercial real estate. I moved to New York City, started with a couple of guys who were kind of my mentors in the business. I spent a number of years with them, growing the business, building my skills. And for, the first 10 years, it was really all about growing the skill set and managing the assets that other people had given me the opportunity to manage. I got into the business on the asset management side of the house and really focused on both the operations and the finance and the accounting, and had an opportunity to dig into all the different aspects of the business so that at the end of the day, I had a really well-rounded experience. Now, I'm thankful that I had the opportunity to be mentored by people who were very successful in the business. And when I started with this one firm in New York City, probably had about $500 million under management. And when I left, I think we were somewhere around $1.5 billion. And we did mostly commercial, office, and multifamily space. So sometimes we might take an office space and convert it to multifamily. Sometimes we take an existing property and renovate it. Lots of different things that would happen. And as you can imagine, New York City is kind of one of the great sandboxes of the world. So there's a lot of things that you can do there. I left there and moved down to Tampa and worked for a real estate investment trust based out of Raleigh, North Carolina. They had about $4 billion under management, and they had previously acquired several smaller shops around the country. And that's what really gave me the exposure to both a larger environment with a publicly traded real estate investment trust, as well as the experience in different markets: Nashville, Pittsburgh, Kansas City, Atlanta, Orlando. And that's what also helped me kind of bridge that gap between working in one area to now working in a regional type setting. Typically what you find in our space is you've got the really large, shops that are billions of dollars. They have pension fund money, they have big checks, and a lot of experience. And then you have the smaller guys who are doing smaller deals, bringing in smaller individual investors, but they don't have a lot of experience. So I felt like there was a little bit of an underserved niche where we could provide the value of the experience at a smaller scale to really give folks like yourself the opportunity to get to know us on a personal level and not have, pension funds competing for those investment dollars. And we're always going to keep it that way. There's probably going to come a point where we'll have pension fund money or private office, family money, etc. But we're always going to keep that friends and family money. We call it friends and family. It's individual investors like yourself. We're always going to keep that because that's how we started. And we want to always make sure we don't lose that core of how we started and how we grew. So that brings us to today, where we've got multiple properties around the country. We're going to be close to $300 million by the end of this year. And we've been able to prove that the model that we set out to build is possible and is successful. And being conservative and careful and diligent is a successful model that works, both for us and for our investors. So I think it's something that, again, comes from that past experience. I'm thankful for the mentorship that I had in the industry. It's allowed me to build something that hopefully is a little bit unique and, of course, can provide some really good returns for all of us at the end of the day through multifamily investing.